Alright, let's talk about trades. I will show you trades I took in the past, and those trades will be AAA trades. By the end of this video, you know what a AAA trade looks like. You can look for exactly that pattern, because let's say in 80% of the situations my trades look the same. This is a trade on the euro-dollar. What happened here is that if we zoom out a bit, we can see that we made this down-sloping trend line here, and we had this upsloping trend line right here, and right now we are here in this constellation. If we zoom out a little bit further, you can see that we have been in this range for quite some while now, after a tiny uptrend. If we take a look at the M15, you can see the same picture. We had one leg up, two legs, then 3 legs. So we have been in this wedge for quite some while now. And if we go down to the M5, we don't even need to go out so far. I mean, I like to do this. The most important thing here is that we broke below these lows here. We retested them, came back down, we bounced from this longer trend line here, came back up into the pivot, and then we made some dojis here, which is always for us the indication that the pullback is going to reverse. We made a very clean pullback. We have a tiny consolidation here, and this is around 1 hour after the London Open, and then our RSI closes below the 45, and our stochastic is coming down nicely as well. So now we have the problem of getting in here because this trend line is still in our way. Do we want to go for a breakout, or do we want to wait for the retest to get short here? I opted to go short in this bar and go to break even very quickly if I see a reaction down here that price is bouncing. And if it breaks through, I simply go to break even. I wait for the retest and I ride this out. That was my plan. So we got in here. We made a double top here, by the way. Stop is 3 pips above. So we are now running at 13 for 20, because it's always important that we have at least 1-to-1 risk reward ratio to the next pivot. And we quickly broke through. Once we broke through, I pulled my stop to break even, and we came down into the pivot. We had the reaction we anticipated. We came back up. I was still in the position, full swing. Then we broke through the pivot with a strong candle after making this double top again, and this is where I decided to purchase another add-on, bring this stop down a little bit behind this breakout bar, and the stop of this also here. So we have a little bit of locked in profit. We opened a new scenario, 17 for 26. And then we made this consolidation, so I pulled both my stops. Here, after we got this bar, we broke through, retested it, came back down. So I pulled it down here. And then we came down to this barrier, is from the macro pattern. Also the S3 is here. Yeah, pivot point S3. This is where I decided to take profit, right here. So we made 68 and 43 in one trade, so very nice. One thing I forgot to talk about is the M15 stochastic, incredibly important actually. Usually when I trade live, I have 2 charts next to each other, so I can see where the M15 stochastic is pointing, and it's only a AAA trade if M5 and the M15 stocks are basically copies of each other. So let's take a look at the M15, and you can see it didn't come from oversold, so this wasn't a AAA trade, but it had already turned, and in this bar even better, it had turned and opened. This is better. If we can see a open stochastic in the direction of our trade, then the chances of it working out are even better. But usually I only like to take trades. If both the M15 and the M5, for example, come from overbought or oversold, if you are in a macro structure like this, you can always try to get in before the boundary is hit, then pull your trade to break even, and you get a better risk-reward ratio. Because these boundaries are magnets, of course, so most of the time price will hit them. If you find a good entry scenario, then treat these boundaries like the pivots and just let price approach them, observe what price is doing, and then act accordingly. Okay, on to the next. Let's take a look at a gold trade I recently took. Alright, this one here. Okay, so as always, we zoom out first. We see this downsloping trend line, very well respected, which we bounced from. What else do we have? We broke this trend line. We broke out of this condensing triangle. We are obviously in a downtrend. There's not much else I need to see here. We zoom in again. We broke through all these lows here and retested them. Stochastic is coming down nicely. The bars look really nice, like we had a perfect rounded top with many stabby bars, some dojis. RSI closed below 45. Take a look at our M15 stocks. Perfect, almost from overbought, already turning and opening. So this is where we get in, right here, with our stop 3 pips above. And then when we hit the pivot, as always, we bring our stop to break even, and then we observe. So we came down, bounced, but didn't really close above the moving average, came back down. So now we pull our stop behind this consolidation, and we made this one, pull a bit closer. Now I'm not so sure what's happening here. At this moment I see this condensing triangle, this pennant breakout to the downside, and we retest it. Once we break below it, I'm thinking that AB is CD, so this move projected to the breakout. So we take this and copy it down here to the breakout, and you see it worked beautifully this time. This is where I put my take profit, and we got 24 for 100. Nice trade, not much else to say here. Okay, this is a trade I took this morning on the Swiss franc Japanese yen. It's a very straightforward trade in my eyes. We got this whole move up yesterday, and then we went into this condensing triangle formation, which on the higher time frames surely looks like a pennant. And then what happened is that we, in the morning at the Tokyo Open, we broke out of this with a strong stochastic. RSI closed above the 55. We go to the M15, and it's also coming nicely out of oversold. So now I'm thinking AB is CD. But when I saw this, so I got in here with my stop down here. 19 pips for 50 is a nice deal, at least 50. We retested this upper barrier, strongly shot up again after that, and then we started this range. And what I usually do is when I start to see something like this, I go to the M15 and observe my stochastic, and the stochastic started pointing down around here, came out of overbought mode. So this is where I went out and looking for a possible re-entry if this should decide to continue. So 19 for 25 roughly. Yeah, not much else to say about this trade other than it was a simple breakout trade, and now we have the pennant and a continuation. On to the next. This is a trade on the NZD CAD. First I want to show you a trade which probably newbie traders would love to take, but I didn't. And then I will show you the trade I took. The first trade I want to talk about is this one. If we zoom out a bit, we see that we have been in massive downtrend. We had this drive down. We had this bear flag. And then another explosion to the downside before we made this double bottom. This double bottom here, triple bottom actually, which also has a small head, so it could even classify as a head and shoulders. But at the point of this trade, we were in the double bottom here, and this seems a little bit like a double top, for example. We expect this to continue to the downside. What is the problem here? The problem is that this is not just simply a complex pullback. The simple pullback was here, when we had this retraction after the double bottom, and then price slowly grinded into this double bottom again, and then we took off again and broke this high here. So at that time, this is not a complex pullback to me. This is already its own structure. We are making this expanding channel here, and the other problem is the stochastic looks horrible. I want to see a clean stochastic, clean symmetrical stochastic when I get into a trade. And we are also quite close to this barrier down here. So if we draw this trend line, then even if we take this trade, we have to go to break even very quickly. So you shouldn't be surprised when price retraces from here, but you can still get out with a small loss once you see this bar close above the moving average and the stochastic is turning. It's absolutely okay to get out here or here. You don't have to wait until your 16 pips stop gets taken out. And then we broke above the highs, retested them, broke this to the top, and now it gets interesting because we broke back down into this structure. Now we go to the M15. We retested this trend line here, the lower barrier of the previous flag. And you can also say that we ran into some supply right here. And now if we go back down, you can see that the M15 stochastic is beautifully coming down from overbought. M5 is coming down beautifully from overbought. We faked out this structure to the top and broke back into it. So now I'm figuring, well, I can at least take this down here to the next pivot, if not further. So I get in with my stop above here, 17 for 33, and we go straight to the target without ever retracing. And this is when I pull my stop into the middle of this move, because we are already at 2 to 1. So I want to lock in at least a little bit of profit, and then we make this range. Once we get this high here and touch the pivot again, pull it down. We broke below, pull it down, and then we started to, it was very late during the day, we started to make closes above the moving average. So somewhere down here is where I got out. After one leg consolidation, 2 legs, almost always works that AB is CD. So even if you take suboptimal trades, you, as we are trend traders, you very often get a chance to get out with a small loss. You just need to be disciplined enough, because I want the trade to take off immediately after I got in. If it turns on me or starts stalling, I very quickly look for reasons to get out of this trade. Or if I made a small profit and it comes back to me, I'm simply out. This increases my bottom line a lot. Okay, on to the next. Another one of my favorite trades. Very clean swing structure, very easy to read. We made this drive up. I don't even need to zoom out here too far, because this is such a clear swing structure that it's obvious where price wants to go here. We had this drive up, we made this pennant, we broke out, beautiful stochastic, go to the M15, just cut above and already opened. I like it as always. It's only a triple A trade to me if the stochastic is coming out of overbought or oversold on the M15 as well, not only on the M5. But this was just such a perfect setup that I'm very willing to bet my money on this breakout here in this bar. Stop goes here, 30 pips. To the next pivot is 53. But as always, when I get a drive and a channel and a drive, especially if it's such a clean move, then my AB becomes CD applied to the breakout point. So actually I wanted to aim for S on, I wanted to aim for R3 here. And when we reached this pivot, I moved my stop to break even. We slowly started to drift back below the pivot. Now I was already getting a little bit worried, but we drifted back up. I moved my stop up as well, and we didn't really make a move, and sometime I had to go to bed, so I closed out around here for 86 for 30, which is absolutely fine. And as you can see, eventually we reached this target up here before we collapsed. So this is really like, if you get a nice string structure, A, B, C, D, that is just so reliable. Very, very often. Okay, on to the next. Okay, another interesting trade on the GBP AUD. Why is it interesting? Because we had this massive drive up. So what do we usually expect if we have a drive up like this? Well, continuation. But what happened is that, as usual, when price came up here, let's do it like this, we once more made this pennant, and I'm pretty sure that a lot of people got faked out. Actually, we should draw it like this. A lot of people got faked out when this broke out to the top and then came down. What then happened is we moved down, we retested this, we made basically this small supply area here, we came back into it, stochastic looked perfect, swing looked perfect, and 15, perfect, coming out of overbought. So who am I to say that I'm not going to get in here? That would be crazy, that would be a waste of money. It was during the Euro session, so I got in here, stop above here, 30 for 50, and this time I was aiming for the gap close, liquidity gap close down here. Let's make this a level. Alright, we never even got there. We closed the gap around 50% and then went back up again. Price came back down. I moved my stop to break even, expecting this to continue hollering down, and unfortunately we got taken out very quickly at break even. So we lost 45 pips on this one, which is unfortunate, but I was aiming for a much bigger target here. Maybe I was a bit too greedy on this one, I'm not sure. That's trading. Okay, on to the next. The next one is a trade I skipped actually, but I want to use this to clarify a point or a pattern I look for, which is the double bottom or triple bottom fake out. And that happened in this instance. We had the drive up, we made the consolidation, unsuccessful breakout, came back down, broke below, almost tested this double top here. Yeah, we broke below all these lows and came back up. And then we broke this local trend line. So this is a really nice trade. Stochastic is pointing up, RSI is pointing up, nicely coming out of the oversold, and 15 looking perfect, just turned just above the oversold zone. We are obviously in an uptrend. This would have been a very pretty trade. I didn't take it because my stop loss would go down here, so 37 for 32. So this is a no trade for me. Those are my rules. I have them for a reason. Other than that, this is just a perfect trade. Now some people could ask, why didn't you take this trade, this breakout here? Well, here the stochastic didn't come out of oversold, which is a must-have criteria for my trade. So this already eliminates that. Then why didn't I get in here? Because we had this drive up. If you go to the M15, We are coming out of overbought right now. We haven't turned yet. So if the M15 stays above the 80 line, for example, and is playing a little game there, like here for example, it stays down there, or it's here, stays below these 20 line, never comes back up, and then we got a pullback on the M5, that is where you can get in. But if it already turned and came out of overbought, then I really don't want to be in this trade against the higher time frame price cycle. I have to wait until the cycle turns again, which it did here. And that was a really nice trade. It took me a lot of discipline to pass on this trade. Next one up is a very obvious trade, again on a GBP USD, and that is this one here. Yeah, right, this one. Massive uptrend. This is still doing the Asian session. Pulled back down into our pivot. We broke, retested it, pulled back down, faked out this low, came back up, broke this trend line. Almost perfect stocks on the M5, M15, perfect stocks already turned, pointing up. So this is a strong trend without a lot of retracement that are worth mentioning, and I expect this to continue. Of course, we also had the round number here, by the way, right here, 124. Crashed into the next pivot, pull our stop behind here, then we broke above it. After the doji candle we broke above it. I lock in some more profit and get taken out quickly. So 32 for 20 roughly, good trade. Not much else to say here other than I would have loved to see this keep going, but then Frankfurt opened and London opened, and that is when usually if we have a trade open from the Asian session we should lock in our profits, because we don't know what these new sessions will be doing. Reverse the trade, keep going, whipsaw us. So the best is to lock in profits, see what happens. And another classic Asian session continuation move on the Aussie dollar. We had this strong move up during the last day's New York session. Then we made this consolidation here, again, one of our favorites. This actually turned into a wedge. We have this high here, came into it, made this small double bottom. If we zoom in a bit, it's easier to see. Double bottom here, right? Small fake out, strong bar, closed exactly on the trend line. That is often a sign for a break of the trend line. We go to the M15, perfect stochastic coming out of oversold. This is the only trade you need to look for. Our stop is 23 for 43 at least. So stop behind here. We make this double bottom, move our stop behind it, tiny swing, move our stop behind it, touch the pivot, and break above it, move our stop behind it. Then we start making this range. So right now we are up like 40 for 23, so a little bit below 2 to 1. And this has gone on for 30 more pips. So our profit potential on this trade would be 70, which is like 3.5 to 1 almost. When I see a move like this, what I want is that AB equals CD. That is where I usually put my target. Applied to the breakout point. So I had my target up there and eventually got taken out. I could have gotten out somewhere here, but I really wanted this to continue. And eventually we hit it almost to the pip. If I put my level here, we hit it almost to the pip before we started retracing. Yeah, but there's no way I could have sat through this whole ordeal consolidation. So yeah, well, good trade anyway. On to the next. This trade is based on one of my favorite price action patterns, a head and shoulders. So left shoulder, head, right shoulder, and we don't wait until the neckline breaks. We want to get in at the right shoulder. So we are in a uptrend kind of. We didn't break below this low here, rather made a double bottom, shot back up, came back down, very erratic price action. And then we made this shoulder here. When we came out of this, I figured I would take my chances because the reward-risk ratio on these can be huge if the neckline breaks. Go to M15, perfect stochastic, coming out of oversold, mouth already opened. Go to the M5. Next pivot is up here, so 50 for 22 roughly, and put our stop here. When we came close to the barrier, pulled my stop to break even and got taken out quickly, and eventually we broke this trend line and advanced. But then, of course, this head and shoulders pattern already lost its validity, even though the right shoulder held as support quite nicely. Okay, next one. Okay, this is a great example about how the M15 stochastic can keep us out of losing trades. This trade just looks perfect, doesn't it? We come down from this double top here. We broke, retested it again, made this double top, and now we are about to, we closed below the 45. We had this perfect trigger candle, and M5 stochastic looks perfect as well. I would love to take this trade, and then I go to the M15. What do I see? Nothing. Huh? We want to see something like this. Put our line here or here. This is the perfect M15 stochastic. Or here. Here not so much. We want it to point in the direction of our trade. We want the mouth to be opened. We want the angle to be quite steep. And here absolutely nothing happened. So luckily I had enough discipline to stay out of this, but I kept watching. And once we faked out this level and broke back below it, that is when I wanted to really get in. But look at our stochastic down here. Nothing happened. We keep waiting. We retested it, and that is one of the rare, really rare occasions when I deviated from my rules. I put in a sell order right here at the retest with my stop above here and my target way down here. Why? Because if we go to the M15, zoom out a bit, you can see we had this head and shoulder like structures here. Head, left shoulder, head, right shoulder. We broke this neckline and we retested it. And we also had this trend line, which we faked out and came down. So this was just too good to be true. And I was protected by my stops up here, and I expected this to run down to close the liquidity gap. And as I already had broken my rules anyway, I kept the trade overnight. Yeah, when I saw this, I pulled my stop here and let it run. I kept managing this trade throughout the day. Here, pull it down here, and so on. Hit our target down here. So this was an easy 34, almost 200. Yeah. Once you have mastered the rules and you know exactly how to trade by the rules, there are certain times when you can deviate, when you see a setup which is just so incredibly juicy that you can't keep your hands away from it. Even Peter Brandt has these trades on a hunch, so to speak, and these hunch trades, they can really contribute to your bottom line, but it just takes so much discipline to not let these hunches take over your trading. You really need to make sure that you have maybe 5 or 6 of these trades in a year at maximum. Just keep it at that. And once you open the door to these trades, it'll be much easier for you in the future to break your rules. So seriously, stick to the rules first. Look for the M15 to come from oversold, the M5 to come from oversold at the same time, and only take those trades. Once you're profitable with that, then slowly you can admit that sometimes our rules make us miss a perfect trade, and then you can deviate from them. This time it paid off, sometimes it doesn't. Okay, on to the next. Next up is an interesting trade on the USD CAD. Firstly, kind of a counter trend trade, which is this one. Here we made this top here, we bounced from the pivot, made a swing down, made a really nice swing up, which is classified as a flag, and then we broke out, we broke below the pivot, perfect stochastic, but as you can see we are in this uptrend, and my target was down here, so we had a 25 for 44, but as we were trading this counter trend, I quickly moved my stops to break even. When we made this swing, I moved my stop behind it and quickly got taken out. So I quickly realized that this structure here on top is part of a much bigger structure. So you could paint it like this. And that this whole thing is actually a pennant. And once I saw this, I saw it around here when I already got stopped out of my other trade. Once I saw this, I was really eager to go long, because as is often the case, AB equals CD. Unfortunately, not in this case, but we got the opportunity to enter on a really nice trade right here. Look at the M15, perfect stochastic, bounce from this trend line, this upsloping trend line, broke this structure and downsloping trend line. It was the perfect trade to me to go long here with a tiny stop of 20 for a potential profit of something up here, yeah. As always, I moved my stop below the pivot when we broke above it and got taken out. And eventually price came down, never reached its target up there. So all good for us. We made roughly 50 pips for 23, so 2 to 1. Very nice trade. Time for another standard trade on the GBP CHF. Broke above this trend line here. We zoom out a little bit. You can see that we have been in this up leg and right now are in this condensing triangle. We broke above it, retested it from the other side, retested these highs. Stochastic is not perfect here, but our M15 stochastic is indeed perfect. And the structure is really nice as well. So this may be not a AAA trade, maybe a AA trade. Absolutely fine with me. Stop down here, 14 for 16. Again, broke through, stop behind, retested it, came close to the other pivot here, so we kept pulling our stop closer and got taken out quickly. 35 for 14. Nice trade. Not much else to say about it. We got a chance to re-enter in one of these candles here once we broke the local trend line, and we faked out this double bottom, but our stop would have been too big to the next pivot, so we didn't get in here. Here's another incredibly easy trade. These are really the easiest ones you can find in all of our strategy and probably in all of trading. Like seriously, it doesn't get better than that. It's like we have this very clear swing structure here, break, retest, break, retest, break, retest, and we get the trend line break, perfect stochastic here. Like sometimes price is just moving in this manner that the blocks will stack on each other, like one block, one block, one block, and of course we had 3 waves to the top already, but this just looked so perfect. I had to get in, go to the M15, perfect stochastic. Yeah. Coming out of oversold, actually already out of oversold, perfectly opened. Zoom in a little bit, you can see it. Go to the M15, M5. We opened clear of the moving average. Very cheap stop. 10 pips roughly. For 20, so 2 to 1. And then we got this triple top, like 1, 2, 3. And the third shaft to the top hit our pivot. A real beauty. Nothing else I can say about this trade. We took profit up here. This next trade serves a point I want to make, and that is only trade against the trend with structure in your back. So you can see we had a nice downtrend here. And then we made these smaller swings to the downside. And then suddenly we broke above this high. We retested it. We made this double top here, by the way. So this would be an okay time to go long. Or even here after we made the double bottom, even better. Almost triple bottom. This is when we want to get in. We don't want to get in down here because of divergence on our indicators or whatever. Or because there was a strong level. I'm pretty sure if we zoom out a bit. And yeah, you can see we came into the bottom of this bucket and then bounced out. But I was looking at exactly this price structure here. We had a drive, channel, drive. So we are in an uptrend, and now we started to retest this level here. So I really want to go long down there, but I didn't really know how to. So I waited for my opportunity, and it came around in the form of this trade. If we go to the M15, we can see we had a okay stochastic down here, and our target was the next pivot up here, or rather the closure of this down move. As always, here is the supply level. We hit it and then broke down again. And yes, here in this trade I had 12 for 11 pips roughly, but it presented itself so nicely that the 1 pip, it wasn't like a deal breaker for this trade. Hardest rule I have is that the M5 stochastic has to come out of oversold or overbought, because then most of the time I can be sure that at least price will move a few pips, which will be plenty for me to move my stop to break even or to get out with a tiny loss should it turn, because I have at least 20 to 30 minutes to assess the situation and get out should the momentum turn against me. The most recent trade I took on the USD JPY was this one right here. And why did I do that? Well, let's zoom out a bit, drive up, made this pennant, opened Tokyo, faked out this trend line here. So I'm pretty sure some people wanted to go short here already because it broke out kind of when we came back up above the trend line. Stochastic pointing nicely, coming from oversold perfectly. I don't know who wants to go short here, but I'm pretty sure a lot of people did. And we go long here with 15 pips. We make this drive up, move our stop here, here, and we hit the pivot. Moved our stop to here roughly, broke through the pivot, moved our stop here, and got taken out. 56 for 16 pips roughly. A perfect trade in the morning. So if you ever are tempted to go short here, for example, because it looks nice, yeah, we made this lower low here, we made this lower high here, and the swing structure looks so nice. Simply zoom out to the M15 and tell me that this is a good trade. And even if you think this is a good trade, you have so many chances to get out with a small loss or a small profit. You have so many chances. Trading with the stochastic and being on the right side of the price cycle just is so smart. Because almost never will you take a full loss on your position. I can't even remember the last time I took a full loss on any of my trades. Most of the time I'm out way before price decides it wants to take out my initial stop loss up here. And that is also what boosts my risk-reward ratio a lot. Do I miss some trades because of that? Yes, of course. But most of the time I can find either a re-entry or a setup on another instrument. So it's absolutely fine, and I save a lot of money by doing this. So there is no discussion. This is the best trading management you can get. Cut your losses quickly, and when you are in a trade and the trade is in a plus, find reasons to stay in the trade. When you are in a trade and it's in a minus, find reasons to get out of the trade. That is my trade management philosophy, and it has served me very well over the years. And another counter trend trade, this one right here. Why did I take this counter trend trade? Well, firstly, really nice swing structure. Broke below this trend line here. We made a 1, 2, 3 in the other direction, which got taken out. We bounced from the R3, so price is really quite overextended here. If we put our level here, zoom out a little bit, see if we can find the reason why price collapsed from here, which was also the reason that made me take that trade. Yeah. So price was quite overextended here. So we hit our 3 up here. Price was quite overextended already from the Asian session. We drifted down, we broke below all these lows and tapped into this space down here, into this liquidity gap. And when that happens, I usually expect it to fill. Once we close it 50%, roughly here, the risk that this gap will close even increases. So as soon as we broke below these lows and tapped into this liquidity gap, into this void basically, I wanted to short this, and I got the opportunity here. And 15 is showing a really nice stochastic, kind of a head and shoulders pattern. It's not perfect, you know, left shoulder, head, right shoulder, but it's enough for me to try to take a short here. So for 30 roughly, came down here, pulled our stop to break even, and we made this range, broke below, pulled our stop here, and then got taken out. And another drive channel, drive trade. As you can see, if we zoom out a bit, we came down from way up here, and then we started to pull back, broke out of this wedge down here to the top. Then we made this head and shoulders kind of, like shoulder, head, shoulder. And then we came down with a perfect stochastic. So I could have gotten in here, but I wasn't so sure yet because we only had 1, 2 waves to the top. I was waiting for the third one, or for a bounce from the pivot to go short. But as you can see, we made this head and shoulder structure here, and the 174 was just right here. So I wanted to get in to not miss the continuation of this move. If we zoom out a little bit, you can see that we broke quite a big structure here. Yeah? We had this massive trend line, which got broken, and I certainly don't want to miss the move which results from the break of such a pattern. which is recognizable even on the H1 or even on the H4 and maybe even on the daily chart. So I certainly don't want to miss the continuation move from that. And I didn't. So I had the slightest chance to get in. I got in. And when I woke up around here and I saw this drive down and I saw this massive breakout out of this massive structure, that's what I usually do. Yeah, if I see a drive like this, the first thing I do is I zoom out as far as I can and see what structure was broken by this drive. And if it's a massive structure like this, I want to get in ASAP. Go to the M15. Stock is not perfect, but it turned. So that's alright. And should I get stopped out here, I give myself at least 2 to 3 more entries or tries to get in on this move, because it's just such a massive breakout. And of course, if you go to the H4, we had a drive down, then we broke, and we had another drive down. So now we are in A, B is CD type of situation. Apply it to the breakout. And we get our target way down here. We go to the M5, that gives us a risk-reward ratio of, I don't know, 1 million to 1. Not so much, but anyway, this is where I got in. And I give the price a little bit more room to breathe in this scenario. So for the whole day we were drifting down. In the evening I pulled my stop back below here, back above here. So right now we had 16 pips risk and locked in 21. Absolutely fine for us. This is when I woke up again. And I pulled my stop behind here. Now I was expecting it to retrace, but it didn't. We had this massive move. So I pulled my stop here. And in the night, before I went to bed, I pulled my stop here, and this is when I got taken out. So I had a massive 16 pips for 107 pips, which was a really nice trade. Could have held it longer, but there's always a re-entry to get in on this trend to make even more dough out of this, because this move isn't dead yet only because we got stopped out. We are looking for re-entries then, if they present themselves, and we try to make the most out of it. Okay, we haven't had a trade on the beast yet. GBP JPY, one of my favorite pairs. When it trends, then it trends. And yeah, this is a classic trade here. Maybe even a trade which some people wouldn't take, because we had this swing down structure. And yes, I have to admit, I went short here because of this double top. Even though we had this drive up here first. But then we came down, we broke below these lows, retested them, made a double top. This is when I went short, and we quickly hit this pivot point. We had this one tiny bar here, so I moved my stop here, got taken out for a small profit. And then what happened is that we got the reverse signal. This turned out to be a flag or a wedge, however you want to see it. Important is that we broke out of this, and when we broke out of this in this candle, I went to the M15 and took a look, and the stochastic looked just perfect. Price structure looked also perfect, because we bounced from these two steady bars here, this double top, actually triple, quadruple top, massive level there. So shorting into that was not my brightest moment, I agree. Luckily I got out quickly and turned around my trade in this bar. Now my stop was quite high, 46, but this was just such a perfect trade because of the massive level, the fake out, bounce from the pivot. We have the round number here, 142. Trendline break. I really wanted to get in. So what I did is I put my stop below this level, which we faked out prior to that. 30 pips, boom, 76 pips. So again, moved our stop to the middle of that move. And then we made this doji here and broke below this low. I decided to move my stop closer and got taken out, unfortunately, before price decided to take another step at this. And this is when I got in again. We faked out this level, basically this high. Tried to bounce from it, didn't work. Had these triple bottoms here, broke again. Stochastic doesn't look perfect, but now we are in a perfect swing structure. 1, 2, 3. And if you draw this trend line here, then you can see that the hit of the trend line almost coincides with our next high up here. So I really wanted to get in on this, and again put my stop below here, 20 for 20. Once we broke through, I went to break even, and because I already had reached my daily goal from this trade, I decided to give this trade more space for breathing, and we eventually hit up here where I had my take profit. So this was a really nice day recently, just 2 days ago. 76 and 83 pips from one instrument, and I made a bunch of more pips on one of the other instruments I watched. Of course, this was all driven fundamentally as well. It helps to know the fundamental situation when you are trying to let a trade run. Okay, that's it for this video. I hope that you learned something from my thought process. Important is always trade the AAA trades first. Make sure your stochastic on the M5 and on the M15 look exactly the same. Make sure that your swing structure is correct. Make sure that you are trading with the trend, that you are not getting in on the 4th flag or the 5th flag of a trend. And choose your take profits conservatively. Don't take a stop larger than 30 pips. Never get into a trade if the risk-reward ratio is smaller than 1:1 to the next pivot. Watch your local trend lines, draw your highs and lows, and everything will work just fine. As always, when you see a trend, when you see a large drive like this, the first thing you always do is you zoom out and you want to know which structure was broken by this move. Then you can assess where you want to get in and where price is likely to go. Alright, if you have any questions about this, then please, by all means, let me know in the forum.